Let's have a look at my stock. This is where I am. So, by the way, I was on a positive note before the American stock market opened, and it literally dropped. The American stock market had a massive free fall, which is great. That's what I will invest. But the British stock market, I'm quite heavy on properties. So like these ones, Bart Homes, for example, Bellway and stuff like that. I will clear them as soon as I get into a bit of profit because my strategy has changed. I bought them for with the view of holding them for over a period of a year. I'm no longer doing that. Therefore, they are no longer in line with my strategy. So I have to sell them when they're in profit, which I will do. But for now, I'll keep them as they are, wait for them to grow a little bit and then clear them. But at the same time, I'm also going to see, like for example, I might sell Bart Home, even though I'm in a tiny bit of profit. I'll sell it on green. Take a little green victory. It's a little one, but take a victory, man. Don't be a hero. So what I'll do is I will probably reinvest that money into some of the American stocks at the moment where they are having a free fall. That way I can get a greater return. I think the short term, my now medium term strategy does not go in line with my the real estate purchase that I've made within the UK because of the fact that they will get me return over a long period of time, but that's not what I want to do. So I think let's have a look. Let's sell one. I think let's sell one. Let's find one. But overall, as you can see, I'm in red. I'm not worried because that's what stock market is about. This is what happens. I was gonna sell Chevron. Shall I sell it? Let's have a look at ExxonMobil. That was up earlier. I'm debating. I mean, I should. My intuition is telling me to take that win here. 6% return. Take it, man. Same with Chevron. Take it because I'm not really here to collect dividend, so it's no point. I should take a win here. 6%. Okay. What shall I do? There's one UK stock. I will sell this one. I'll take the nice little 2% ROI on it. Yeah. So what I'll do is down a little bit. I could have waited to get here. I'm still up by. Yeah, I'll sell because I'd rather use that money. Like I said, my short-term strategy is slightly different now, and that's as easy as that. Look, sell, free, no commission, boom, done. Okay, hopefully they'll sell. Sometimes if there aren't enough trading going on within the market, then they stay held like this, as you can see, pending order. So hopefully this is a good stock. This is a popular stock. So hopefully I'll get it sold. So anyway, hopefully that'll happen in the behind the scenes while I do other stuff. So that's the market for me to sell. If I can sell it, great. If not, that's gone down, but that's fine. The property market in the UK is having a horrid time, which is no problem. I'm willing to ride that wave. It'll probably take a month before it kind of corrects itself. So no problem, no drama there. I'm trying not to invest no more than £400 in a particular stock or £300 like Target unless it drops significantly. There you go, it's sold. Happy days. So I took a little victory, 2% victory. I'll take that. Victory is good. Trainline, I actually took a risk with this one. This is a risky stock, but it tells me they could free fall a bit more, which is fine. But again, I'm willing to hold on this one. So I took that risk here with that view. That's fine, no problem. I'm willing to hold. Let's see how far down it goes. But also, as you can see, these peaks here, that's a good sign. So it goes down, but then it goes up. Yeah, it goes down, goes up. So that's really, really good. That's a good sign to bear in mind when it comes to doing short trading. Anything else worth selling? See, I spent quite a bit yesterday, but I'm already in positive. So that's really good. I think my intuition is telling me to sell Unilever purely because it was up close to 5% yesterday, I think, overall. So I might sell that because I think I should sell when they reach certain figures. Right now, overall stock market is not having good. Oh, that's dropping quite a bit. I bought a decent share in that one. Let's have a look at it. Yeah, so okay, that's fine. I'm down 2% from what I purchased, but then this had a free fall yesterday, as you can see, massive drop from here to there, plummeted literally. So it's good. Okay, cool. I'll hold it. I don't think I'll strengthen my investment into this any further. I'll just keep it there and monitor that. Zoom, I invested a bit more, hence why I'm down. I was actually, no, it went up, then it went down basically. So I bought a whole share in, no, I didn't actually. So it's going down a bit more. That's cool, no problem. So I'll probably buy a bit more. Yeah, that's fine. I wanted to buy this particular stock anyway, so I'll buy that stock at some point today, a bit more as it's dropping. So if I go on my home screen, as you can see, Nvidia, all of these tech stocks, they're correcting themselves. They went up too much, too high. I bought a share in that actually because I do like this company. I think it has a nice little growth trajectory. It's a growth company, but it's got potential. See, if that's 1 year high here, it's potential for it to reach that level. But if you look at Max, it's got a lot of potential up here, as you can see. So there are other factors, not just that, but I'm also using graph as an indicator, and I'm finding my graph reading is quite helpful, especially when I can compare to its where it is now. Like for example, it's here, it's likely to go up, isn't it? So if it goes up, it's likely to go up in profit. I'm happy to take 7-8%, 10% ROI, happy days. So that's what I'll do. So I'll watch that. I'll probably buy a bit more share into this particular brand. It's got a good market cap here, as you can see, 25 billion market cap, revenues 1.6 billion. It's a new company, electric company, but I'm buying it mainly because of its buying potential and selling potential. There's a lot of volume within that particular brand, Rivian Automotive. So going back to, where was I? Yeah, let's look at my watch list. What am I? Here, my watch list. Shell's dropping, so I'm watching Shell because I'm keen on purchasing a couple of stocks. Yeah, I'm in negative now. So since I'm in negative, I will purchase some. I've been watching that stock all day. I'll buy 10 shares. Nope, don't have that. 2. Yeah, I'm happy to buy 2. Yeah, send the order in. So yeah, easy as that. So I just bought some share in that one. Alibaba's dropping a bit more. I'll watch that. I was going to buy a share in this particular brand, but look how high it has risen within a day. 17%, man. Hell no. It's going up too fast, as you can see. Within a week, 20% climb. Nah, that's got to plummet at some point. It will drop. It's on a rise. It's on a crazy rise. Definitely don't buy here. Definitely do not buy, because look at the graph. It's constant rise. So when it drops, that's when, oh wow, look at that. Within a whole year, it's a massive. It's great. That's great. But look at the drops it has. So it will be worth purchasing when it drops, and then basically buying and holding. I think this will give you a good return, this particular stock. Right, anything else worth looking? Stellantis, I made a profit on that one. I made 10% profit because I bought it. I think more than 10%. I bought it here somewhere. So right now, as you can see, it's 1 month profit is about 12%. That's great. But 1 week is, so I sold it here. So I made a good move there. I felt this was just, it couldn't steady the ship. And also it started flatlining a bit and dropping. So I thought, okay, it's going to drop. So it's likely to drop a bit more. But the looks of it, did I buy anything in this? No, I haven't bought anything yet. So I was going to buy at some point yesterday, but I've decided to hold it to see if it will correct itself in terms of the drop. So the drop could be a bit more. So it'd be worth waiting. It'd be really, really worth waiting, unless it drops to another 2%. Yeah, if it drops to another 2% from today, I will purchase a share in that one and hold it, basically, because that's been quite a good one. It's a really good. I don't want to buy, so it's notification for AO. AO is a good penny stock. 1 week, as you can see, is quite high, but it is dropping quite rapidly. 1 month is. Okay, yeah, that's got a lot of as you can see, these rises and drops, rises and drops, rises and drops and so on. So that's really good, actually. It's a good thing. So it's dropped by quite a bit. Should I buy one? Yeah, I should. One all week low. Yeah, why not? Let's buy a small share in there. Let's play with this. So, have I got share purchased already? I think I might have an order waiting. Nope. I was going to purchase some. Right, let's buy some. 10 shares to play with. 20. Risk it for a biscuit. Go on. So as you can see, it's pending, which means not a lot of volume going through this particular order. If that doesn't get fulfilled within the next 5 minutes, I'll cancel it, because otherwise I'll end up buying and selling it to myself. This is the same mistake I made with this one, war paint. Where's my war paint? So with war paint, when I tried to sell it in positive by a few percent, unfortunately I couldn't sell, because even though it's got, like, 222 million market cap, and it's a good company, it brings a nice little return, so I'm happy with that, but the point is I couldn't sell that stock within a couple of minutes, which meant not enough volume is going through that particular stock. So I'm fine with holding it, because this nice little dividend, isn't it? So the dividend here will outweigh my loss here. But this is the only week where it's been in loss. Prior to this, it's been on a growth, actually, funny enough. Let's have a look. I'll show you. So I was here. I bought it here. I was here. So I made it. Well, I was making good return, but never mind. I decided to hold it. I'll hold it. No regret. I do have one regret. Oh, I bought it. There you go. So, that's cool. That's fair enough. I bought that share now. The one regret I have is Shoezone. So this was one of the very first stocks that I purchased. I purchased it at, I'll show you where I purchased it. I purchased it quite high, as you can see here, the line here, the grey line. I purchased it there, which was so dumb and stupid, because the reason why I bought it there, I felt that its overall trajectory was on the rise and a growth, and it's likely to continue that, which it probably will, by the way. It probably will, and it probably will correct itself, this loss here. And it kept dropping last week here, so I bought a bit more shares to balance out the loss. I do have, so I bought it here because of an analyst, and this was my first mistake I made when I started the stock trading. I listened to a couple of the analysts, and I think that's when I learned my lesson, is that don't listen to analysts. Instead, make decision based on my own knowledge and intuition, and my intuition told me not to buy. That's why I said not to buy here, because it's too high. Look, it's almost all-time high within that year. Why would I buy there? Great if it continues rising, but you're risking for a biscuit, basically. It's literally 50-50 risk factor here. I shouldn't have done that. I learned my lesson, and I don't do that anymore. I wait till they drop. If they don't drop, great. I'll just hold my money, keep it safe. But the other thing is, it's got a dividend return as well. So that dividend return, although I missed out the first 2 quarter dividends, I'll wait. I'll still, but you'll still soften the blow a little bit here. So that's cool. We'll do that. So there's a lesson learned here, basically. Massive, big lesson learned. I'll also clear that once it goes into profit. At the moment, it's dropping quite a bit. But again, this is another good one that this was the one I bought based on British economy, but this was before my change of strategy and tactics. So based on my current tactic, this does not sit well, as you can see. But if I'm willing to hold that particular stock over a year, no problem at all, and it will give me a profit, hopefully. If it doesn't, then you cut your loss. And this is why you should diversify your portfolio into different sectors, different businesses, different stocks. That way it doesn't hurt you if it goes pear-shaped. Like, for example, I strengthened my hand in this stock when it was down quite a bit, but it's giving me a nice little return now, 4%. I'll wait till it's giving me 7-8%, and I'll then clear it, sell it. See, this was up yesterday, by 5%, and now it's down significantly. So yeah, okay, I should have sold it then. Lesson learned. Lesson learned. Again, another lesson. Yeah. Yeah, moving money about is really important. That's fine, no problem at all. I learned a few lessons. I'll carry on. Yeah, that's it. Nothing else really. You learn your lesson. But main thing is, you take a. Well, so far I have not taken any red. I've not taken any red. I've profited. Like this one, I put £600 in this one, Johnson and Johnson. I made a video about this on my channel. This is a royalty stock, and this royalty stock is, I bought it when it was down here. It had a free fall. It had a massive free fall. Was it here or there? Yeah, I think it was there. No, it was there. Yeah, I bought here £600 when you had a free fall, and look, it's gone up 4%. So once it corrects itself, I probably get about 8, 9, 10%. It's a nice little happy return on that one, isn't it? If I can get 10% return on it, that'd be great. You give me a nice little profit. So royalty stocks is worth investing in when they go down. I'll clear that one because that was again one of the stocks that I purchased based on long-term strategy, but that's no longer the case. So what I've been doing lately, I'm clearing a couple of my stocks based on change of strategy. So yeah, and I could wait and hold this one. As you can see, it's got a 1 week growth quite high, as you can see here. So that's not a bad investment. I might reconsider this, but I need to do a bit more study into this particular stock and understand whether this goes in line with my medium-term strategy or not. It goes with my long-term strategy, definitely, but it doesn't go with my short-term strategy. At the moment, see, nice little dividend return. It's a dividend payer, regular. All that stats is good, solid, strong. So really good for long term. Purchase this particular stock, but like I said, I need to go back to the drawing board, have a look if that's worth me buying or not. Part of my short term strategy. So I'm like I said, my stock gathering information is changing according to my strategy at the moment. Same with this one. This was part of long term. I'm going to clear that as well once it's in a bit of profit. It was on profit last week. I think I was on profit by 8%, but it's what it is. As you can see, they go up and down. So this is why it's really worth taking the profit at 6, 7, 8%, and then reinvesting when it drops, because it's likely to go up again. Yeah, so again, EasyJet I bought with long-term view. Again, it doesn't go with my short-term plan anymore. Same with Currys, I bought that based on my long-term vision. Doesn't go with my long-term vision any short-term medium-term plan any longer. Therefore I got to sell and clear. I'll sell Coke as well. Cisco, I bought it when it was really, really low, so it's part of my short-term plan anyway. So yeah, like I said, I'll move my money about, and that way hopefully I'll get it into profit. See, Apple was on 5% last week. Should have sold it, but hey, I got a bit greedy thinking it might go. Actually, that's one stock I was keen on just holding and piling more money into, because if you look at the Apple stock, generally speaking, it's actually a really, really strong stock. Overall, it performs really well, as you can see. Come on, data. Yeah, so as you can see, it's got a really nice growth, but it's dropping a little, but that's fine. It's part and parcel of the game. Overall, it's got a nice trajectory of rise, so that's nice. But there's a drop here. Obviously, this is another thing, is that sometimes we wish, I could go back and purchase stocks here, because imagine the profit you'd have made from there to here. Massive. But this is again part of learning, part of your studies, is that when it does drop like this, there will be reason why it drops. It might be because of CEO or bad announcement regarding its earning, profit share, whatever. When it drops, you should buy and hold, because remember you said if you could go back in time, you would buy here. So this is a common thing that happens with a lot of the stocks I noticed, and that's what made me realize, no, I should buy when it drops significantly. Not any stocks, like especially royalty stocks like Apple, and like this is one of my other royalty stock I purchased, but it was down significantly when I purchased it. See, S&P Global, it was down drastically, like it had a free fall, but I purchased it, but it's growing slowly again. It was down today, but it was growing, as you can see. Earlier today was in green. So it started growing, but it will take a bit of time to get up, but that's part and parcel of the trading and learning